Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.
Uranium is on the march. This is Paul Harris for Kitco Mining at Deutsche Goldmesse in Frankfurt in Germany. Joining me to discuss this further is Warren Gilman, Chair and CEO of Queen's Road Capital. Warren, welcome to Kitco.
Thank you, Paul. Great to see you again.
Likewise. Now, Warren, let's start with who or what is Queen's Road Capital?
All right. Queen's Road Capital is a Toronto-listed company. We are Caymans Incorporated, which is very tax efficient. And we are an investor in the global mining space. I'm a mining engineer by background, and I use that training as well as my financing background to deploy people's capital. About 80% of our shareholders are Australian-based billionaires. So you have to be very, very careful with their capital. They don't like to lose money, but they like unrestricted upside in what they invest in. And that's what we do. And we try to do that through the use of structure, mainly convertible debentures. So we don't, generally speaking, buy equities in different mining companies. We buy convertible debentures.
I want to talk about that a little bit more in a moment, but it's quite unusual for an investment company such as yours to be listed, particularly listed in Canada when most of your investors are Australian. So talk me through that.
Yeah, well, it's really a result of history. I took control of this Toronto-listed shell 4 years ago now, and all my friends in Australia thought it would be great fun to put some capital into that and get involved investing in the sector. That's how it happened. So perhaps it's not the best structure, but it is the one that we have, and it seems to work reasonably well.
Okay, so that happened 4 years ago. They still think it's great fun to be invested in the junior space?
They do. I mean, that is the purpose of the company. We all see tremendous upside. That's already been proven out with, as you mentioned, we're going to talk in a moment about uranium. But we've had extraordinary returns since we started investing 3 years ago. And I think we're going to see equally extraordinary returns in the coming years.
Okay, so what resource sectors do you like? You mentioned uranium, but what about gold, battery metals, copper, others?
Right. So I always answer that to begin with by saying we're commodity agnostic. We'll do anything. And I say that literally. We will do anything. We'll invest in any commodity as long as it's a rock. We won't do oil, for example, and we don't do anything carbon-based, so we don't do coal. But other than that, if it's a rock, we'll do it. And I don't care if it's in favor or out of favor. I don't care if it's well-known or no one's ever heard of it. One of the best investments we made in my previous life, running Li Ka-shing's money through a company called CEF, was in the niobium sector. And as some people know, there are only 3 producing niobium mines on planet Earth. No one knows anything about niobium. And we think that little known metals like that offer great opportunity. But as I say, we'll look at anything, and we tend to look at things that are out of favor. We made our first investment, our first investment at Queen's Road was in the uranium sector 3 years ago, when people questioned the future of uranium and questioned the future of the nuclear power industry. It was very much out of favor, which has worked very well in our favor.
Is that one of the advantages you have, given that most of your investors are billionaires? Does that give you let's say, the relative luxury of having investors with a long-term view,
Absolutely.
Which this sector really needs?
Absolutely, Paul, you said it. This sector really needs a long-term view. When I decided to cross the street, if you will, and go from the mining advisory and sell side, I was a banker for 26 years, to the investment side, we considered a lot of structures and had a lot of approaches from people who wanted to start a fund, for example. And funds just aren't suited to the investment horizon of the mining business. You don't want to have capital that people are pushing you to invest now. You have to be careful about your timing. Mining is all about timing. Likewise, on the selling, if the fund runs out of time after 5 years or after 7 years and you have to liquidate the fund, you're going to, by definition, get your timing wrong. And you're starting the business with a handicap, which is your investment horizon. Having a public company, which is permanent capital, and having like-minded, long-term investors, whether they're billionaires or whether they're ordinary people who simply adopt our perspective that timing is everything and you buy when things are cheap and sell when things are very expensive. And if that takes 2 years, wonderful. But if it takes 10 years, as long as the return makes sense, you wait and get your big return in 10 years. You have to have that like-minded perspective on investment timeline.
Now, a lot of things are very cheap right now, and a lot of the commodities have an outlook to do well and do better in the future. But imagine you need much more than that to make an investment decision. So what do you look for in projects?
Well, the very first thing we look for, and I must say it's about 90% of the weighting of an investment decision. One might argue it's 110% of the weighting of the investment decision, is the quality of the ore body. If you don't have that, then it's a non-starter. So you have to have a very, very high quality ore body. And there aren't that many around. So frankly, it makes my job pretty easy. People always say, Warren, you run a very small team. I should emphasize that Queens Road, public company that is worth hundreds of millions of dollars, and we have 3 employees. So they say, you only have 3 employees. When you're investing all that money, you must be reviewing hundreds of projects every year, and it must take an inordinate amount of time. And you won't invest in a project unless you actually go and visit it. So you must go and visit tens of projects a year. And the answer is no. We probably look at 4 or 5 things a year. I go and see maybe 2 projects a year. And maybe we make 1, maybe we make 2 investments a year. We're very, very particular about quality. But when we find quality, we don't hesitate to write as big a check as we possibly can. I think they have a term for it, highly committed investor, or it's just, the term escapes me for the moment, but we're one of those guys. Once we like a project, we want to go in it big time. We don't want to have 100 small investments. We want to have 10 big investments. And that's what we do. So to get back to the answer to your question, what do I look for? I look for quality of deposit. The next thing on the list after the quality of the deposit is, where is it? Because it's no sense having an investment in a deposit that A, you won't be able to ever build, or B, once you build it, you won't have the social license to continue to operate it. Or C, you may build it and operate it, but at some point in hopefully the 100-year future of this ore body, some government or some person is going to try to come by and steal it from you, in which case you never really owned it, you just borrowed it for a while or leased it for a while. So you have to have the combination of quality of deposit and safe jurisdiction.
You mentioned you prefer to invest in convertible notes. Why is that? What benefit does it give you, Queen's Road Capital, and what benefit does that give to the recipient, the junior mining company?
Let's talk about the mining company from their perspective first. I think the benefits to us are obvious. We're investing in great ore bodies, and we're getting paid by the company to invest in that great ore body by way of the interest on the debenture, which is a debt security. But we get unlimited upside in the equity of that company in the future. So the investment rationale for Queen's Road Capital and for our shareholders is pretty obvious. What does the company get out of it? Very, very simply, minimizing dilution. There are all sorts of other bells and whistles, which I can get into, which are of a benefit to the company. But the single most important thing is understanding that if you've got an ore body that has an NPV that is 10 times or 100 times the value of your shares currently, which in the mining industry, almost all companies fall under that description, it's very, very destructive to your shareholders to be constantly raising money at this huge discount to NPV. When you do a convertible with Queen's Road Capital, you're doing it at 130% premium to market. So you're reducing the number of shares that are ultimately going to be outstanding, and you're doing your shareholders a great service. I use a typical example of a company that's doing $100 million capital raising. They usually can go to one of the Canadian or American banks and raise a significant amount of money, but it's usually at, say, a 10% discount to market, and the broker is going to charge you in that environment 5% commission. So you're doing it at a 15% discount to market net to you, the company's shareholders. You do a convertible with me, it's at a 30% premium to market. The difference between the two, 30% premium versus 15% discount, is 45% difference in the number of shares outstanding for the same amount of money. 45%. This isn't a small difference, it's a huge difference in the amount of shares outstanding. And the second thing that I'd like to emphasize about that is usually when you do that, say $100 million financing at a 10% discount, if the stock goes up 20%, people sell out and take their profit. Understandable, but you as a company basically wind up having to place those same shares over and over and over again because people are constantly selling them and you need to find a buyer to buy those. With Queen's Road's money, you have our money for a minimum of 5 years and potentially a lifetime. We never sell a share. I get that debenture certificate. It goes into my safe in Hong Kong, and I pull it out 5 years later and say, what are we going to do with this thing? Are we going to extend the maturity? Are we going to convert and hold those shares? But it's a minimum of 5 years. You never see that flood of paper coming back at you virtually ever again. So not only is it no dilution, but it's no dilution, reduced dilution, but you just don't see an overhang of stock. Whereas with typical equity raises, you get that overhang of stock almost the day after you close the deal. So huge benefits to the issuer who has the right ore body that's strong enough to attract Queen's Road Capital.
Now, one of those issuers that has a strong ore body that's attracted Queen's Road Capital is NexGen Energy. You recently invested $70 million into that company, a uranium company. How do you see the uranium market playing out, and by extension, the nuclear power market?
Right. Well, it's hard not to be extremely bullish. Price of uranium is obviously on a roll right now, but I don't see anything stopping it from going much higher. So we're probably heading for a triple-digit uranium price, but even if we do, what is going to change to have the price fall as opposed to go up? there simply isn't any new supply coming on at virtually any price. The two major players, Kazakhstan and Cameco, have already announced that they are going back to full production. So we don't have an OPEC situation where we're trying to keep prices high by restricting supply. The two biggest guys have already said, we're full on, we're producing everything we possibly can. So that is already in the market. So what else in terms of supply can come onto the market? Well, there are a handful of developers that are coming on in the near future. Two very well-known names are Boss Energy, listed in Australia, $1.5 billion market cap. Paladin, reopening their mine in Namibia, $3 billion market cap. These are rounding errors in terms of supply. This year, we're talking about production of about 130 million pounds a year. Boss, I emphasize, has a market cap of $1.5 billion a year, is looking at producing about 1 million pounds next year. And when they get up to full production, we're talking to 2.4 million pounds per year. It's a rounding error. It's a drop in the bucket. That is the new supply wave that's coming on. And it's going to come on whether prices are 80, 90, or 100. Whether prices are $100 a pound or $150 a pound, there's effectively no material new supply coming on market. Whereas on the demand side, we read about it in the paper every single day about reactors that are being constructed as we speak, about reactors that were scheduled to be shut down, whose lives have been extended, about reactors that are probably going to be part of an expansion, and we're looking at France right now, for example, potentially approving 10 or 12 more brand new, massive, large reactors. And this is even before we start talking about the new wave of SMRs, small modular reactors. We're going to see reactors around the corner in all parts of society 20 years from now. That demand is not even built into the forecasts yet. So demand is transparent. We know it's growing. And there's virtually no, certainly no material supply growth, with the one exception being NexGen, which is going to be material, and they are going to help, but the world needs a lot more than NexGen. Given all that, Paul, it's pretty hard not to be excited about uranium.
Okay, we are at a gold conference, principally a gold conference. Let's talk a little bit about gold. Gold juniors...
Uranium is yellow. Does that count?
Nice point. Gold juniors say they present incredible value at the moment, with many trading at less than $10 per ounce in the ground. Do you see things that way, or are there other reasons why gold juniors are so valued so lowly?
I do see things that way. There's no question that gold equities are undervalued. That probably explains why the last two investments we made were in the gold space. Contango, which is developing their super high grade open pit in Alaska as we speak, US listed, and Challenger Exploration, developing a very high grade skarn in Argentina, ASX listed down in Australia. So those are the last two investments we made in the gold sector. And not to let the cat out of the bag, but I expect the next investment we announce, which could be as early as next week, will be another gold investment. So that's 3 in a row.
In the Americas, somewhere else?
Yes, in the Americas. So I think, follow the money. We clearly believe that gold is a great place to be, and that gold equities at this very moment are a great place to invest. Now, having said that, I come back to my very first statement, which is, for us, it's all about quality of ore body. And so I've got a very binary view of the value of ore deposits. Either they're worth a lot of money or they're not worth much of anything. So I don't really subscribe to the view of, well, at $15 an ounce, it's great value, and at $30 an ounce, it's maybe too expensive. Are those ounces worth anything? If they're worth something, then they're worth a lot. They're not worth $1 or $2 an ounce. So we always keep our filter on with respect to quality. You know, Mr. Lee, Li Ka-shing, who I used to work for, always struggled with valuations of mining assets because his view was, you know, he was a real estate developer, and he always thought, well, there's no such thing as bad real estate. There's a really expensive real estate, your AAA building in downtown Toronto, and then there's a really cheap housing out in the country where you're far away from anything. But at some price, cheap can get really cheap and expensive can get really expensive. But real estate always had value. Then I told him, look, in the mining business, it's the exact opposite. You got a limited number of really good things, and you want as much of those as you can get. And all the other stuff, it doesn't matter how cheap it is, you don't want it. There's no such thing as getting value for money in the mining business. Value for money is achieved by having a great ore body and owning it. And we have to put gold investments within that filter.
What about copper? You are invested in Los Andes Copper, which has a development stage project, Las Vachitas, in Chile. The copper story seems to have got a bit stuck this year, or held up at least. Do you think it will unstick next year?
That's, again, a question that I think there's probably a little bit too much consensus around the answer. And so I always worry when there's too much consensus. But yes, I do believe that the future for copper is incredibly bright. So I look at the current situation as a huge opportunity for Queens Road Capital and for your audience. Copper is something that is going to be very well sought after. There aren't many opportunities when you have a commodity like that where it goes on sale and there's a brief opportunity for you to invest at, shall we say, fair prices as opposed to exorbitant prices. And we have that environment right now. So in addition to gold, Queens Road is going to be focusing on increasing our copper exposure in this environment. The year 2023 has been very good in terms of throwing up copper opportunities for very good projects that meet our quality filter. And 2024, we're going to continue to pursue those potential investments. And I'm reasonably confident that we'll be able to do so in a, shall we say, buyer-friendly environment through 2024. But after that, I think the window is gone for the rest of our investment lives. I think this is the one opportunity we have to get positioned at very, very fair copper prices, very, very fair company equity value prices that later on we'll look back and say, why didn't I put more money into it back then? That was a steal. Well, I'm telling you right now, it's a steal.
Well, investors love a bit of hindsight investing, don't they? Warren, thank you very much for joining us today. A fascinating conversation.
Well, thank you, Paul. It's been a pleasure.
And this is Paul Harris for Kitco Mining at Deutsche Goldmesse in Frankfurt, Germany. And if you like what you hear, don't forget to subscribe.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.